It's getting more difficult for Spain's government to borrow money. The Spanish Treasury did manage to sell €3 billion worth of government bonds in its latest auction, but had to offer higher rates of interest to entice investors. That's because the financial markets remain unconvinced Spain's problems can be solved by the austerity measures being brought in return for bailout money for the country's banks. This bond buyer says on longer-term bonds, the interest the Treasury has had to pay is frankly high, and that's where the auction suffered most. There are still many doubts about Spain. There are still doubts about what the conditions of the bailout are going to be. What happens in terms of the signing and agreement of the bailout Memorandum of Understanding is very important. The final terms for the €100 billion bailout for Spanish banks will be discussed by EU finance ministers on Friday, but the European Commission has just said that that money can only be used for recapitalising the banks, not for buying government bonds, removing another potential lifeline for Madrid.